Hey everyone, welcome back to Corporate Decoder, the place where we uncover if the big corporations are playing by the rules or just playing us. Today we're diving into Goldman Sachs Private Credit Corp. Its latest report, and let's just say there is more to this than meets the eye, especially when it comes to the money they're making and how they're making it. So, what is the big story here? It looks like our friends at Goldman Sachs Private Credit Corp have been busy selling shares and sharing some juicy distribution details. We've got unregistered sales of their Class I shares, and they're also dishing out details on their October distribution and how their investments are performing. It is a mix of raising capital and reporting on how that capital is working for them. Let's kick things off with some share sales that happened without the usual song and dance of public registration. Back on the 1st of November, and with the final numbers locking in on the 28th of November, the company sold over 10 million shares of their Class I stock. This wasn't some small, casual get together. They raked in a solid $261 million from this sale. The company says this was all done under specific exemptions from registration, basically meaning they sold these shares directly to certain investors who met specific requirements. They're counting on these investors being what they call accredited investors or non-US persons, which means these buyers are presumed to be sophisticated enough to understand the risks involved without needing the same level of public disclosure. It is a way for companies to raise funds quickly from big players. Now, let's talk about how they're rewarding shareholders. They've announced their October distribution, and for the Class I shares, it is an amount of 19 cents per share. This sounds small, but when you annualize it and look at their net asset value, it works out to a yield of about 9.1%. That is a pretty decent regular payout. This distribution is set to be paid out around the 5th of December to those who own the shares at the end of October. Shareholders have the option to take this in cash or to reinvest it right back into buying more shares. Looking at that 9.1% annualized distribution yield, it gives us a snapshot of the income shareholders can expect. It is calculated by taking the monthly distribution, annualizing it, and then dividing it by the net asset value per share. It is a way to gauge how much income the investment is generating relative to its value. But distributions are only part of the picture. We also need to see how the underlying investments are doing. The report gives us an estimated total return based on the net asset value, or NAV, as of the end of October. For the Class I shares, we're seeing some interesting numbers. Their total return for just 1 month was 0.6%. Over 3 months, it was 2%, and year to date, they've seen a 6.9% return. But the really impressive figure is the return since they started operations or inception to date, which is 10.1%. This suggests that while the short-term ups and downs are there, the long-term performance of the fund's investments, assuming distributions are reinvested, has been quite strong. This long-term return is particularly important to watch as it speaks to the fundamental growth and earning power of the company's portfolio. Now, let's drill down into the net asset value itself. As of the 31st of October, their total net assets were hovering around a massive $8.2 billion, and the net asset value per share for Class I shares was right at $25. What is really interesting is the fair value of their entire investment portfolio, which stood at a substantial $13.2 billion. This difference between the net asset value and the fair value of the portfolio hints at how their assets are valued and structured, and it is something that savvy investors always pay attention to. Finally, let's touch on leverage. As of the 31st of October, their fund leverage was at 0.5 times. Now, what does this mean in plain English? It is calculated by looking at their average borrowings over the month compared to their average net assets. A 0.5x leverage ratio means that for every dollar of net assets they have, they're borrowing an additional 50 cents. Leverage can amplify both gains and losses. So this ratio gives us an idea of how much risk the company is taking on to potentially boost its returns. It's a key indicator of their risk management strategy. So wrapping this up, Goldman Sachs Private Credit Corp has had a busy period, successfully raising significant capital through unregistered share sales, and importantly, providing clear performance metrics on their investments. The distribution yield of 9.1% is attractive, and the long-term total return of over 10% since inception is a solid indicator of their investment strategy's effectiveness. The leverage ratio of 0.5x suggests a moderately leveraged approach, which can be beneficial for boosting returns, but also carries inherent risks. Looking at the overall picture, the company seems to be executing its strategy effectively, focusing on private credit and generating income for its investors. The strong NAV performance over the long term is a major positive. One notable risk, however, is always the potential impact of market downturns on their leverage positions and the value of their investment portfolio. Investors need to understand that past performance, as they themselves state, is not a guarantee of future results. What is my take? Goldman Sachs Private Credit Corp appears to be a well-managed entity within its niche, delivering consistent distributions and solid long-term returns. Their ability to attract significant capital even through unregistered offerings speaks to investor confidence. The key going forward will be how they manage their leverage and navigate any potential economic headwinds that could impact the private credit market. They are in a strong position, but the inherent risks of leverage and market fluctuations are always present. Alright, that is our breakdown of Goldman Sachs Private Credit Corp, its latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.